You've heard the saying a million times, right? Buy low, sell high. It's practically the first rule of investing. But what if I told you the key to truly explosive returns was to do the exact opposite? Today, we're going to break down a pretty wild stock market strategy that challenges almost everything you think you know about making money.
Okay, let's get right into it. Take a look at the market since September 2024. If your money was just parked in the Nifty 50 index, you're looking at a loss of almost 3%. Pretty frustrating. But in that exact same time frame, a huge stock like Bharti Airtel shot up nearly 14%. It's a classic story, right? The overall market is just chopping around, going nowhere, while a few individual stocks are taking off like absolute rockets. And this leads to the big question, the one that probably keeps you up at night. Why does it feel like your portfolio is stuck in the mud while you see these other stocks just soaring? Well, the source material we're digging into today suggests there's a very specific reason for this, and even better, a system to get you on the right side of that trade.
And that brings us to something the source calls the momentum paradox. It's an idea that just flies in the face of conventional wisdom. It suggests we should ignore almost everything we're told to look at and focus on one thing and one thing only, the price itself.
It all boils down to this one powerful phrase, Bhav Bhagavan Che, which pretty much means price is God or price is king. The core belief here is that a stock in motion tends to stay in motion. And we're not talking for a few weeks or a few months, we're talking potentially for years. This single idea is what makes this strategy so different from everything else out there.
Now, to really get on board with this, you have to be willing to do something that feels wrong. You have to be willing to break what many people consider the absolute golden rule of investing. We're not trying to find bargains. We're not trying to buy low. We're looking to buy high and sell a whole lot higher.
And what's so fascinating here is the psychology behind it all. You know, the traditional idea of buying low usually means you're trying to catch a falling knife. Think about it. Every single person who bought that stock before you is losing money. They're all just trapped, waiting for the price to get back to where they bought in so they can sell and get out. It's a constant battle. But buying at an all-time high? Man, that's a different universe. You're hopping on a rocket ship. Everyone who has ever bought that stock is in profit. There's zero resistance, nobody desperate to sell. It's just clear blue skies ahead.
And this is the critical realization that just makes it all click. If you want to capture those life-changing 500% plus returns, a stock has to, by definition, make new all-time highs again and again. So if you're not willing to buy at a high, you are automatically disqualifying yourself from ever catching those huge winners. It's that simple.
Okay, so how do we actually find these rocket ships? This is the best part. The source material lays out this incredibly simple, almost mechanical three-step system. It's designed to help you pinpoint a stock at the exact moment it goes from being weak and ignored to being incredibly strong.
All right, here it is, the whole pattern. Step 1, you've got the dip. This is when the stock was weak, nobody wanted it, and it was trading below its key long-term average. Then comes step 2, the rocket recovery. It doesn't just crawl back, it comes roaring back with unbelievable force. And then step 3, this is the magic moment, the all-time high breakout. It smashes through its old peak with real conviction. That is your green light. That's the entry.
Now, the entire system, and I mean the whole thing, hinges on one simple tool, the 200-day exponential moving average, or EMA. Just think of it as your trend compass. It's a simple line on the chart that tells you at a glance what the long-term health of the stock is. But maybe even more importantly, it's your non-negotiable exit signal.
And the rule book for this? It's so simple, it's almost beautiful. Is the stock's price above that 200-day line? Great. The long-term trend is up, you just hold on. Does the price close below that line? The trend is down, you're out. Period. No emotion, no overthinking, no second guessing. It's black and white. There is no gray area.
Okay, so the theory sounds good, right? It's simple, it makes sense, but the real question is, does this stuff actually work in the real world? Well, let's take a look and see how this system really performed using some actual examples from the source material.
All right, get ready for this. A massive, staggering 566% return on one stock, Varun Beverages, or VBL. And this wasn't some lucky punt. This was the result of just systematically following the exact entry and exit rules we just laid out.
And what's so incredible about this trade journey is how it shows the power of the system. The entry was a clear all-time high breakout. And then, for almost 4 years, the system just did its job. It filtered out all the scary headlines, all the noise, the war in Ukraine, a global inflation crisis, you name it. The only reason to sell was when the simple rule was finally broken. The price closed below the 200-day EMA. That's it.
And look, this isn't just some magic trick that works on smaller, obscure stocks. The exact same pattern showed up in huge Nifty 50 blue-chip companies. We're talking a 94% return in Mahindra & Mahindra and a 55% return in L&T Finance. The psychology behind the pattern, it seems, works everywhere.
All right, so that's the core system. It's powerful on its own, but what if we can make it even better? What if we could add a professional-grade filter to help us really dial in on only the absolute best of the best setups? Well, the source material introduces just that, borrowing from a true trading legend.
And this is where it gets really cool, because this simplifies the entire market. The legendary trader Stan Weinstein basically showed that all stocks move through 4 distinct stages. There's the sleepy basing stage, the powerful advancing stage, the tricky topping stage, and the painful declining stage. For our system, it's simple. We avoid 3 of them. We only care about that one sweet spot, the powerful stage 2 advancing phase.
So this brings us to the golden filter rule. You only act on that 3-step breakout signal we talked about if the stock is also entering or confirming that it's in a strong stage 2 uptrend. It's the combination of those 2 things, the breakout signal plus the stage 2 confirmation, that's the secret sauce. That's what helps you filter out the mediocre trades and find the real A+ opportunities.
All right, let's bring this all home. The big idea here is that once you understand this framework, you can start to see the market differently. It stops looking like just random, chaotic noise and starts to look like a series of repeating patterns, almost like fingerprints left at the scene of a crime, again and again.
So here it is, your complete momentum breakout system, boiled down to 4 simple rules. Number 1, dare to buy at all-time highs for those clear skies with no resistance. 2, use that 200-day EMA as your unemotional mechanical trend compass and your exit rule. 3, hunt for that specific 3-step pattern, the dip, the rocket recovery, and the breakout. And finally, number 4, supercharge your results by filtering for stocks that are only in a confirmed stage 2 uptrend.
And at the end of the day, this quote just nails it, doesn't it? A simple, rules-based system works so well precisely because it gets your emotions out of the way. It stops you from hesitating. When the rules are crystal clear, it's so much easier to just execute. Complexity, so often, is the enemy of getting things done.
So, I want to leave you with this final thought. The source material makes a powerful case that the market leaves these clear, repeating fingerprints for anyone who's willing to learn how to spot them. So the real question is, after breaking all this down, can you start to see them now?